Good afternoon, everyone. I'm Bagadan at Stock Market Caddy, and today is Saturday, October 1 at about 12:40. And once again, we're putting together a series of videos here at the start of October to show you where the market is, where it's been, and also where it might be heading. Now, we build highly specialized proprietary decision-making trading software tools, much of which is shown in a easy to understand English version of what we call radars. But we also use charts, but we use some rather non-traditional charts, things called price charts, that can show us exactly where the price action is. This is a Renko chart on the S&P 500. And we have just a few of our specialized tools on here. You can see the green support lines, the red resistance lines. You also see little green dots and red dots. The green dots are what we call C-point buy signals, and red C-point sell signals. These tools are ideal for the active trader, but even the investor can use this particular chart, which is set based on an algo that recommends we set it at 17 points, that gives a person a daily view. If you wanted to see it on a weekly basis, this would need to be increased and would be set by an algo. But just stay with me for a moment as I consolidate this, and I want to show you something, the big picture here for a moment. I'm going to bring this in. This is the high water mark established earlier in the year. It's a little bit out of view, but it was up around 4,600. Now we drew this Fibonacci tool months ago down to what we felt was the obvious C point here. And we then connected it up here. I'm sorry, this was the B point. This was the C point. When we connected this at 43.37, we said to our members then, don't be surprised that this turns out to be the C point, and that these series of, that's a much larger C point, by the way, C point down, but that these minor C points were just a little bear market rally. Now, good money could have been made buying off of these, but it was right up here that we started to see the C points, the minor C points, down. Then we had a little bit of a suckers rally, and you can see now for a period of weeks the sell signals all the way down. The Fibonacci's give us a zone of where this market might be headed. Now there could be some fits and starts in here, but again, we drew this extension back here when we were at 4,300. 100% extension of this entire move would bring the S&P right down to 3393.24. That's entirely likely. Now, there could be some rallies early next week. Near term, we're a little overdone, but this appears to be a pretty good target area. If this does not hold, and there's no guarantee that it will, the next level is 32.42, the 138 extension. I'm not saying it's going to go there, but it's entirely possible. And let's bring this up. If this does not hold, the next level would be the 1.61 extension at 2809.50. You might want to save this video. This will take weeks, if not months, to play out. But what is very clear to us, both on this chart and on our weekly swing machine, is that we are in a definitive downtrend. And there are no guarantees. There is no moving average. There is no narrative that is necessarily going to save the day. Markets can go up irrationally high, as we've seen. Bitcoin, 80,000. S&P, 4,600. It is normal for markets to pull back 50%. A 50% normal retracement off the S&P high of about 4,700 would bring it down to what, about 2,350 or so, thereabouts. That would be normal. What can happen though is once a market goes down 50%, that's when people can panic that didn't get out up here, and maybe they put money in up here thinking it was just another dip. And if they panic, we can go even much lower. We have systems that can trade these individual C points and other systems that certainly trade the C points down that can keep us in sync with what the market is doing. You see, folks, nobody knows exactly where the market is going. No more than with all the sophistication and all the tools, anyone could say with absolute certainty where that hurricane was going to go. Nobody knows. But what we do is to track the money flow. So you might consider this a bit of a market track. And the market track right now is down. And it's headed right now for 3,400 and maybe lower. I'm Bagadon at StockMarketCaddy.com. If you want to see these tools on a nightly basis for when you can tune in as a monthly member, it's $100 a month. If you would rather have these tools on your desktop with the instruction on how to use them and ongoing guidance and support throughout the year, we have an annual membership. You're welcome to give me a call at 813-758-8263, 9 a.m. to 9 p.m., weekday, weekend. I'm happy to take your call. If you've lost money, you have my empathy. I understand what that's about. I have lost money over the years. My wife and I have been involved in the market since 1981. We have been active traders since the early 2000s. We understand that pain. It's how and why we built the tools that we did and how and why we built Stock Market Caddy. We do not make specific recommendations to buy or sell anything. We are not soliciting funds to manage. That's not who we are. We are a mentoring site. Normal people. I taught surgeons how to do surgery for over 20 some odd years. My wife Susan worked for the likes of IBM and Lotus Software. We've applied our skill set and our knowledge and our training in developing these tools. And we make them available for our members with the instruction on how we use them. But you can take them and tailor them and develop your own base set of skills to do and get done what you need to get done on an interval and on a risk basis that best suits you. We realize this isn't for everyone, but for those folks that would rather paddle their own canoe as opposed to listen to CNBC or the Wall Street Journal or the IBD or the VectorVest or God knows who on the Twitter sphere making this recommendation, that recommendation, you might want to check us out. We wish you the best. Call anytime. Bagadon, StockMarketCaddy.com.